Meantime, I want to get your thoughts on another CEO who's also taken to Twitter quite often. Actually, he might have pioneered this in many ways. According to the Wall Street Journal, which cites some SEC records, the regulators have apparently told Tesla that it failed to oversee those Elon Musk tweets, violating a court-ordered policy brokered after Tesla and Musk settled a case with the SEC that you oversaw back in 2018. What do you think?
Well, Andrew, you know I'm not going to comment on a specific case or settlement, but what we are seeing with social media and these communications is the ability of what I would say is a very short piece of information, a small piece of the overall mosaic, move markets. And, you know, as just a person who looks at markets, that does concern me because, you know, what makes up a good investment is never just that one piece of a mosaic. And let me just say this, just taking one of those pieces and amplifying it without updating the rest of the picture, you know, that's not something
Jay,
that we should be encouraging.
But is the SEC being defanged to some degree by social media, by even the courts? I ask because you look at that Elon Musk case, and if you remember, the judge said, effectively tried to get you guys to settle the case, both sides to settle the case, rather than actually go fully to trial. You haven't seen the SEC actually then go after Elon Musk again based on this new information or these more recent tweets. And I imagine one of the reasons that people aren't bringing these cases is because they're not sure whether they're strong enough.
But look, one of the things about regulating markets you have to recognize is that they're not at all static. We're seeing the rise of social media for communications with the investing public. We're seeing the digitization of processes and assets across the board. The SEC has adapted to developments in technology before. As I've always said, I have great faith in the women and men of the SEC to do so. But you're right. It's we have to bring forward our principles in the law, and make sure that these new technologies are captured by those principles.
But what's your sense on why that hasn't happened then?
I think it is happening, Andrew. I think, look, dramatic change is never smooth or predictable. Okay, I mean, what we're seeing with the digitization of processes across the financial community, I think is pretty darn significant. And regulators are going to need to look at the principles that we've applied over the years. The segment before this was dealing with Bitcoin and illicit payments. We've dealt with illicit payments, money laundering, know your customer before. We're going to need to step up and do that again as this technology changes.
Well, let me just ask you one final sort of public policy question. We have so many viewers who say, look, the hedge funds are manipulating the market all the time. The SEC doesn't go after them. Can the SEC go after some of the retail investors and others that are on Reddit for manipulation? Or from a public policy perspective, is that just impossible?
Yeah, I think people throw the word manipulation around somewhat carelessly. Manipulation is a true effort to, in its classic form, raise the price in the short term and then get out, buying in low, selling high, and doing so by, trying to cause short-term price movements. Let's put it this way. Again, the women and men of the SEC are looking for that. I think, and they should continue to do so. And we should continue to use technology to do so. As trading technology increases, the surveillance technology needs to increase.
Shepard Smith here. Thanks for watching CNBC on YouTube.